If you're a restaurant owner, you're probably dreading tax season right now. I get it. If you're busy running your business, managing staff, dealing with vendors, and the last thing you want to think about is taxes. But I've been a CPA for about 20 years, and I can tell you that the decisions you make right now in February could save you thousands of dollars or cost you thousands if you wait too long. So in this video, I'm going to walk you through the most common deductions restaurant owners miss, the mistakes that cost you money, and a simple checklist you can follow to get organized before the April rush. By the end of this, you'll know exactly what to do this month to keep more of your hard-earned money. Let's start with the money you're leaving on the table. These are the deductions I see restaurant owners miss year after year. First one, equipment purchases. If you bought kitchen equipment, furniture, or technology in 2025, you can write that off. And a lot of restaurant owners think they have to spread this out over several years, but you can actually deduct the full cost this year. So if you spent $50,000 on new ovens or a new POS system, that's a $50,000 deduction right now, but you need the receipts and documentation to back it up. Second, small repairs and maintenance. You can deduct the cost of fixing equipment, repairing your building, or maintaining your space. A lot of restaurant owners forget to track this because it feels like small expenses here and there, but it adds up. Oil changes for delivery vehicles, fixing a broken freezer, patching a leak, all of that counts. Third, uniforms and linens. If you're buying uniforms for your staff or paying for linen service, those are deductible expenses. Just make sure that you're tracking them. Fourth, credit card processing fees. Every time a customer pays with a card, you're paying a fee. Those fees are deductible. If you're processing thousands of transactions a month, those fees add up to real money. Don't leave that on the table. Fifth, professional services. If you paid for accounting, legal help, consulting, or marketing, those are deductible. A lot of restaurant owners forget to include these because they're not thinking about them as operational expenses, but they are. Six, employee meals. If you're providing meals to your staff during their shift, you can deduct those costs. Just make sure you're documenting it correctly. Now, let's talk about the mistakes that cost you money. These are the things I see constantly, and they're all preventable. Mistake number one, mixing personal and business expenses. You use your business card for personal stuff, or you use your personal card for business expenses. And by the time tax season rolls around, you can't remember what was what. The IRS wants clear separation. So set up a dedicated business account and use it only for business. It'll save you hours of headache and protect you if you get audited. Mistake number two, poor tip reporting. Tips and service charges are not the same thing, and the IRS treats them very differently. Tips are voluntary and go directly to employees. Service charges are mandatory fees you add to the bill, like automatic gratuity for large parties. Service charges are treated as regular wages, which means you owe payroll taxes on them immediately. If you're treating service charges like tips or not reporting tips correctly, you're setting yourself up for penalties, and those penalties can be thousands of dollars. Mistake number 3, not tracking mileage. If you're driving to the bank to meet vendors, to pick up supplies, or anything else for your business, you should be tracking those miles. Use an app or keep a log in your car. Mistake number 4, losing receipts. You can't deduct what you can't prove. If you don't have receipts or documentation, the IRS can disallow your deductions. Start using an app or system to capture your receipts as you go. Don't wait until tax season to dig through a shoebox full of crumpled paper. Mistake number 5 is waiting until March or April to get organized. By then, you're rushing. February is a sweet spot. You'll have all your documents. 2025 is still fresh in your mind, and you have time to be strategic instead of just reactive. All right, so what do you actually need to do this month? Let me give you a simple checklist you can follow. Step 1, gather all your 1099s and W-2s. If you haven't received all of them yet, follow up. You need those to file. Step 2, pull your profit and loss statement for 2025. If you use accounting software like QuickBooks, you can generate this in a few minutes. Step 3, separate personal and business expenses. Go through your bank statements and credit card statements. Flag anything personal that might have gotten charged to your business account and vice versa. Clean it up now before you file. Step 4, organize receipts for equipment, repairs, and other big expenses. Pull those receipts now while you can still find them. You're going to need documentation for your deductions. Step 5, review your tip reporting and payroll. Make sure your W-2s are accurate and your tip reporting is set up correctly. If something looks off, talk to your payroll company now. Step 6, track your mileage from January and February if you haven't been tracking it. Start now, better late than never. Now, if you're watching this and thinking you don't have time to figure all of this out, I'm offering free 2025 tax prep sessions for restaurant owners right now. We'll sit down to review your income and expenses at a high level, spot deductions you might be missing, and map out exactly what you need to have ready before you file. It's a conversation to make sure you're not leaving money on the table. You'll walk away with a clear checklist and answers to your questions. The link to request your appointment is in the description below. So, if you want help, grab a spot now while they're still available. Thanks for watching, and I'll see you the next time.